Some analysts are predicting silver could hit $175 per ounce before the end of 2026, which sounds absolutely insane considering it's trading at $84 right now. But the bull case might actually be more compelling than you think. Wednesday, February 11th, 2026, New York time. Please share in the comments what day and date you're watching this from. I genuinely appreciate seeing how far this message reaches. Before we begin, a quick note. I'm currently working to reduce copycat channels that mirror this content. If you find value in what I'm building here, the best way to support this effort is simply by subscribing and leaving the name George Williams in the comments. It may seem small, but it truly makes a meaningful difference. Now let's talk about this $175 price target because I know what you're thinking. You're looking at silver sitting at $84.72 per ounce today, up nearly 5%, and you're wondering how on earth it could more than double from here by year end. That would require a gain of over 100% in less than 11 months. It sounds like fantasy, right? Like something a silver bug would dream up after too much coffee. But here's the thing. If I had told you in early 2025 that silver would surge 147% in a single year, you probably would have laughed at me then too. Yet that's exactly what happened. Let me give you some context about where we are right now. Silver has already gained 162.45% compared to where it was a year ago. It's up 11% just in 2026 alone, and we're only in mid-February. Just a couple of weeks ago, silver broke through the psychologically massive $100 barrier for the first time in history. Yes, it crashed spectacularly afterward, losing 50% of its value in a matter of days, the largest single-day drop ever recorded by the LBMA. But here's what the bulls will tell you. That crash wasn't about fundamentals. It was about over-leveraged speculators getting margin called when the CME raised requirements from 11 to 15%. It was a technical event, a shakeout, not a fundamental rejection of higher silver prices. So let's build the bull case piece by piece and see if $175 is actually possible, or if we're all just getting carried away by precious metals fever. The first pillar of the bull argument is the supply deficit, and this is critical for you to understand. For the sixth consecutive year, the world is consuming more silver than it's mining. We're talking about a deficit of 67 million ounces in 2026. Think about what that means. Every single year, 67 million ounces of silver have to come from somewhere other than new mining production. Where does it come from? Above-ground inventories, stockpiles, reserves that have been built up over decades. Now you might be thinking, okay, so we draw down inventories, what's the big deal? Here's the big deal. You can only do that for so long before those inventories run critically low. We're now 6 years into this deficit. The global silver market is quite literally relying on pulling metal out of vaults to meet demand. At some point, and the bulls argue we're approaching that point rapidly, those vaults start looking pretty empty. When that happens, the only way to balance the market is through price. Price has to rise high enough to either stimulate new supply or destroy demand. Given how long it takes to bring new mines online, we're talking years. The adjustment mechanism is going to be price-driven demand destruction. But silver's uses are so diverse and critical that demand doesn't disappear easily, which means price could overshoot dramatically. The second pillar is monetary policy, and this is where things get really interesting. Markets are currently pricing in roughly 60 basis points of Federal Reserve easing by year-end. That's not speculation. That's what the futures markets are telling us. The Fed is expected to cut rates. Why? Because U.S. economic data has been disappointing. Retail sales unexpectedly stalled in December. Confidence in U.S. assets has been deteriorating. When central banks cut rates, when real yields go negative or compress, precious metals historically perform extremely well. Silver, with its dual nature as both an industrial metal and a monetary metal, tends to outperform gold in these environments. The gold-to-silver ratio right now sits at 61.2, which is near the lower end of its multi-year range. Bulls argue this ratio could compress much further. If gold holds its value or rises, and silver outperforms, you get explosive moves in silver. Let me show you the math on what $175 would actually require. From today's price of $84.72, we need to see silver gain roughly 106%, basically more than double. Is that unprecedented? Actually, no. In 2025, silver surged 147%. In 2020, silver rallied over 120% in a matter of months. We have recent precedent for triple-digit percentage gains in silver within a single year. The metal is notoriously volatile. When it moves hard and fast. The question isn't whether silver can physically achieve these gains, We know it can. The question is whether the conditions exist to trigger that kind of move. This brings us to the third pillar, safe haven demand. We're living through a period of elevated geopolitical tensions. Pick your crisis: US-China tensions, Middle East instability, questions about the Federal Reserve's independence, persistent policy uncertainty in Washington. Each of these factors drives investors toward hard assets. Gold gets most of the attention, but silver is often called poor man's gold. It's more accessible, trades at a lower nominal price, and offers leveraged exposure to the same macro themes that drive gold. Coin and bar demand has strengthened significantly in recent months. Global exchange-traded product holdings stand at 1.31 billion ounces. That's real physical demand from investors who want exposure to silver. The fourth pillar is industrial demand, and this is where the story gets nuanced. On the surface, industrial fabrication is forecast to decline by 2% in 2026 to around 650 million ounces. The photovoltaic sector, which has been a massive consumer of silver for solar panels, is experiencing weakness as manufacturers work hard to reduce silver content and find substitutes. This sounds bearish, and it is for that specific sector. But here's what the bulls focus on: the emerging demand sources. Data centers are expanding at an incredible pace, driven by artificial intelligence and cloud computing. These facilities require enormous amounts of electronics, and electronics require silver. The automotive sector, particularly electric vehicles, uses significantly more silver per vehicle than traditional combustion engines. As EV adoption accelerates, silver consumption in automotive applications grows. The bulls argue that while old demand sources like photovoltaics might decline, new demand sources are ramping up to replace them. The net result might not show massive growth in industrial demand, but it provides a floor. And remember, with over 50% of silver demand tied to industrial applications, this isn't just speculative money sloshing around. There's real, tangible consumption supporting the market. Now, let's address the elephant in the room: the crash. How can bulls possibly maintain a $175 price target when silver just lost 50% of its value in days? Here's their argument, and it's worth considering carefully. That crash was a liquidation event, not a fundamental repricing. Highly leveraged traders, many of them Chinese speculators, according to U.S. Treasury Secretary Scott Bessent, got caught when margin requirements increased. They were forced to sell regardless of price. Automated liquidation systems kicked in. It was a cascade, a technical breakdown, not the market saying silver is worth 50% less than it was the day before. In fact, bulls point to today's price action, up nearly 5% and recovering toward $85, as evidence that the fundamental bid is still there. The crash shook out weak hands, reset sentiment, and potentially set up for an even stronger move higher once confidence returns. UBS, one of the world's premier banks, forecasts that silver will return to $100 by next month. That's March 2026. They then expect it to fall back to 85 by year-end, which sounds bearish. But think about the journey they're describing. From 84 to 100 in a month, that's an 18% gain. If silver can get back to 100, which is just $16 away from current levels, then the psychological barrier is broken again. Once above 100, the path to 125 doesn't seem so crazy. From 125 to 150 is the same percentage gain, and from 150 to 175 is less than 17%. When you break it down into stages, the move starts looking more achievable. The time frame question is crucial. Can this happen in 2026, or are we talking about a longer-term target? The aggressive bulls say 2026 is absolutely possible, pointing to the pace of the 2025 rally and arguing that momentum is still building despite the crash. The conservative bulls say 175 might be a 2027 or 2028 target, but the trajectory is established. The key is catalysts. What could trigger the move to 175? Let's think through some scenarios. A major geopolitical event, something like a serious escalation in global tensions, could send safe haven demand through the roof. A supply shock, perhaps a major mine closure or unexpected production issues, could tighten the physical market dramatically. A breakthrough in technology that requires significant silver, something we can't even anticipate right now, could create explosive new demand. Or, and this might be most likely, a Federal Reserve that cuts rates more aggressively than currently expected, pushing real yields deep into negative territory and making silver incredibly attractive. Timeline scenarios matter for how you think about positioning. In the best-case scenario, silver breaks back above 100 in March as UBS predicts, consolidates briefly, then catches a major catalyst in mid-year, perhaps a Fed rate cut or geopolitical event. From there, it rallies to 125 by summer, 150 by fall, and potentially touches 175 in Q4 2026. This would require sustained momentum and multiple positive developments, but it's within the realm of possibility. The realistic case might look more like silver consolidating between 80 and 100 for the next few months, establishing a base, then gradually grinding higher through year-end, reaching 125 to 140 by December. 175 becomes a 2027 target in this scenario. The delayed case, which is still bullish, just slower, has silver chopping around current levels through most of 2026 as the market digests the crash and works through uncertainty, with the major move higher not materializing until 2027 or beyond. Key price levels to watch as milestones become your roadmap. $100 is obviously the first major test. Silver needs to reclaim and hold triple digits convincingly. That means not just touching 100 but staying above it for weeks, building a base. Once that's established, 125 is the next target. That level represents about a 48% gain from current prices and would confirm the bull trend is intact. $150 is where things get serious. At that level, silver has nearly doubled from today, and you're starting to see real validation of the most optimistic forecasts. Finally, 175 is the ultimate bull target for 2026, representing a full doubling and then some. Risk factors that could derail this entire thesis need honest discussion. If the Federal Reserve doesn't cut rates as expected, if they actually hold steady or even hike, that would be extremely bearish for silver. If the US economy shows surprising strength, removing the safe haven bid, silver could struggle. If industrial demand declines faster than anticipated, particularly if the global economy slows sharply, that removes a key support. If new mining supply comes online faster than expected, though this seems unlikely given development timelines, it could ease the deficit. And perhaps most importantly, if we see another wave of forced liquidations or regulatory changes that make holding silver more expensive or difficult, we could see additional crashes that destroy confidence. How do you position for this potential move while managing risk? This is critical. If you believe in the 175 target, you don't go all in with maximum leverage. That's what got thousands of traders destroyed in the January crash. You build a core position in physical silver or ETPs with money you can afford to hold long term. You add to that position on dips, dollar cost averaging into weakness. You might use a small portion of your capital for more aggressive plays, mining stocks or options, but you size those appropriately knowing they could go to zero. You set realistic targets and take profits along the way rather than swinging for the fences on every ounce you own. What signals would confirm or invalidate the 175 thesis? Confirmation signals include silver reclaiming $100 and holding it, mining stocks beginning to outperform the metal itself, physical premiums expanding, indicating tight supply, and continued Fed dovishness with rate cuts actually being delivered. Invalidation signals would be silver breaking below $75 and staying there, the Fed turning hawkish and raising rates, industrial demand data coming in significantly below expectations, or massive new supply discoveries. Alternative scenarios if 175 doesn't materialize matter too. Maybe silver tops out at 125, which would still be a 48% gain from here and an excellent return. Maybe it consolidates in the 90 to 100 range for years, providing steady if unspectacular returns. Maybe, and this is the bear case, it retests the lows around $70, and we realize the entire rally was speculative excess. Understanding these alternatives helps you stay flexible rather than married to one specific outcome. If you found this analysis valuable and you're thinking seriously about whether silver can hit $175, I need you to hit that like button right now and subscribe to this channel. Drop a comment below telling me, do you think 175 is realistic or complete fantasy? What's your price target for silver by the end of 2026? Are you buying at these levels or waiting for a better entry? And remember to leave the name George Williams in your comment. In the next video, I'm going to break down the practical strategies for actually playing the silver bull case, whether you're working with $10,000 or $1 million. You won't want to miss it. Until then, trade smart, manage your risk, and I'll see you in the next one.